Rhynhardt, thank you so much for joining us today. Firstly, your view on the closing price of the markets. We saw resources flat today, financials as a result steaming ahead, and industrial sector once again stronger today. Your view on this sector play we've seen today.
Look, I think it's quite hard to commentate on just a one-day move, but certainly equity stronger across the board. The market has certainly been in kind of risk-on mode for the last week or two, expecting maybe further central bank intervention, further interest rate cuts, maybe some quantitative easing. So it's not surprising to maybe see the US do relatively well because you did point out that retail sales were slightly stronger. I think perhaps going into the rest of the week, maybe markets could be a little bit worried now that we might not get quantitative easing, might have spillover effects to like commodity prices, etc. That's kind of been the tone of the day.
Rhynhardt, we saw some bond sales yesterday, some weakness there. Year to date, we've had foreign investors particularly interested there and less interested on the equity side. If you look at the equity side, what are the movements that we've seen lately, the themes?
Look, if you look at the bond market, I mean, it's I think one must just point out that South African bonds have done phenomenally well, and that SA bond yields have gone from close to 8% to close to 7% after the interest rate cut in the last couple of weeks. So that has had a very positive effect on the likes of SA domestic retailers and to a lesser extent the banks. So SA domestic shares have done phenomenally well on the one hand, and resources counters on the other hand have done very, very poorly. So there is very much a large disparity in the South African market when it comes to performance.
Of course, I was talking about the platinum price there, Rhynhardt, and it has managed to get a little bit of a boost. It's not, it hasn't rallied today, but it's sitting just below $1,400. That, as a result, seen with Lonmin cutting production there. Your thoughts on all these production cuts that we're seeing right now? Of course, Lonmin, a case in point of the issues that miners are facing right now with the result of violence on the mines as a result of trade unions having a go at each other.
Look, my take on the state of the market when it comes to supply and demand fundamentals is perhaps slightly more bearish than most people. I mean, if you look at the platinum surplus as quoted by Johnson Matthey at the end of 2011, I think it did amount to about 430,000 ounces. Now, if we take the cuts that we've seen year to date, I think it's in the region of 130 to 150,000 ounces. Some miners have been deferring some of their projects, but that will only take out I think supply coming in from 2013 to 2014. So as we sit today, I think the market is still quite oversupplied. I think there will be another surplus by the end of the year. So it will really take one of the large major players. And when I say a major player, I kind of think that the market leader, which is Amplats, should probably take kind of leadership and take ounces out of the market. I think the market has been relatively disappointed that they haven't stepped in, and until they do so, I think that the platinum price could be relatively depressed for the rest of the year.
So Rhynhardt, bottom line is that with these production halts and cuts that we've had, that they're actually negative for the companies involved because there's not a sufficient pullback in supply to influence the global price in platinum.
Yes, certainly. I think most of the companies are finding it very tough to operate. A lot of the junior companies are certainly loss-making. And if I look at the major companies like maybe Lonmin, Aquarius Platinum, they at best breaking even still, even after shutting down their loss-making ounces. Probably the best positioned would be Impala Platinum. They are lowest on the cost curve. Northern Platinum probably is not in too bad a situation, but the industry for the year will certainly be on a net basis will be loss making, and I think like as I pointed out, it will take drastic action to actually remove some of that surplus, because I think global demand is probably still deteriorating, especially on the automotive side. So next year is probably not going to be any easier. So it's probably a sector that I'm still a little bit nervous on in the short term.
And of course, Rhynhardt, Eastplatz, the latest company to report a quarterly loss, $85.7 million. But let's move on to the insurance sector. Santam came out with a trade update today, expecting headline earnings per share to be between 25 and 35% lower. Some taxation issues there eating into earnings. But overall, how did the market take to these numbers?
It was broadly in line, maybe marginally disappointing, because as you pointed out, some of the tax funnies was perhaps greater than expected. They did pay a special dividend in March, so they have to pay STC on that special dividend, which increased the effective tax rate. And then the effective rate that they are paying on their, or the CGT rate that they are paying on their deferred tax liabilities have also increased. So net, what you'll probably see is when they report, their all-in effective tax rate will probably be north of 45%, which is quite significantly higher than kind of the normal rate of 28%. And that is why on an after-tax basis, earnings will be down 25 to 35. On a pre-tax basis, it'll look a lot better. Earnings will probably be flat. And I still think it's quite a good performance because their underwriting margin in the first half of last year was very high. It was at about 8.5%, and their targeted band is 5 to 7%. So still, I think a relatively good set of numbers from a very well-run company.
There was Rhynhardt Roodt. He's an equity analyst at Investec Asset Management. We apologize for the bad picture in the interview. Cape Town is having bad weather.